I'm Kelly Ranson from San Antonio, Texas, and I wondered if you could comment on the mutual savings and loan. There was just a footnote that the deposits had been assumed by a federal savings bank. And also, what about the annual report for Wesco Financial that I know it used to be in the annual report for Berkshire? Just wondered if you could comment on that, please.
The question is about our 80% owned subsidiary Wesco Financial sold its ownership in Mutual Savings and Loan of Pasadena last year. I'll let Charlie comment on that. And then the second question is about the Wesco report, which is available to any Berkshire shareholder simply by writing Wesco. But we found that stapling problems and other things made it a little difficult to keep adding that every year to the report. So now we make it available to anyone who would in Berkshire who would like to have it. But Charlie, you want to comment on the sale of Mutual?
Yes, the savings and loan business became very much more heavily regulated after the huge nationwide collection of scandal and insolvency and so on. And meanwhile, we had a very small savings and loan association, and the combination of the new regulation and the fact that it was a very small part of our operation made us decide that we were better off without it. That does happen from time to time in Berkshire. We do exit once in a while. And by the way, we would reserve the right to change our mind. I always liked Lord Keynes when he said that he got new facts or new insights, well, he changed his mind, and then he'd say, "What do you do?" So we changed our mind.
They asked our directors at Mutual to start going to school on Saturday, didn't they, Charlie, or something? I think that helped change our mind about Mutual.
Yeah, there's a time to vote with your feet.
And even your wallet. Yeah. Zone 3.
Chicago. Can you speak to some of the economic characteristics of the shoe industry that allowed the business to be profitable and, in your view, attractive?
I didn't hear that. Did you hear that, John?
He wanted you to comment on the merits of the shoe industry.
Well, I think our feelings for the shoe industry are very clear from what's been happening the last few years. We think it's a great business to be in as long as you're in with Frank Rooney and Jim Isler and Peter Lunder and Harold Alford. Otherwise, it hasn't been too good. We have a couple of extraordinary shoe operations, but they're not extraordinary because we get our leather from different steers or anything of the sort. We have two companies, really three now that Lowell's been brought into, but that have truly extraordinary records. I think those same managements would have been enormous successes in any business they'd gone into, but they have gone into they are in the shoe business, and the companies earn unusual returns on equity. They earn unusual returns on sales. They've got terrific trade reputations. And I think that to the extent we can find ways to expand in the shoe business while employing those managements, we'll be very excited about doing so. It isn't because we think that the shoe industry is any cinch, per se, or anything of the sort, but we've got a lot of talent employed in the shoe business, and whenever we've got talent, we like to try and figure out a way to give them as big a domain as we can. And it's not inconceivable that we would expand the shoe business, perhaps even significantly over time. Zone 4.
Yeah, thanks, Mr. Buffett. My name is Stuart Hartman from Sioux City. And after the brevity of the last question from Section 4, I'll try to be extremely brief. Given the scrutiny that the tobacco business is going under right now, number one, what do you see as the business prospects for those huge cash cows? And at any point, would that be attractive to you given their liability?
questions about the future of the tobacco business? I probably know more about that than you do, because it's fraught with questions that relate to societal attitudes, and you can form an opinion on that just as well as I could. But I would not like to have a significant percentage of my net worth in the tobacco business myself. But they may have better futures than I envision. I don't really think that I have special insights on that. Charlie, you?
No.
You have to come to a conclusion as to how society is going to want to treat, and the present administration for that matter. The economics of the business may be fine, but that doesn't mean it has a great future. Zone 5.
I'm Harriet Morton from Seattle, Washington. I'm wondering, when you are considering an acquisition, how you look at the usefulness of the product.
In looking at any business?
Yes.
Yeah. Well, obviously, we look at what the market says is the utility, and the market has voted very heavily for Dexter shoe, just to be an example. I don't know how many pairs of shoes they were turning out back in 1958 or thereabouts, but year after year, people have essentially voted for the utility of that product. There are 750 million or so 8-ounce servings of one product or another from the Coca-Cola company consumed every day around the world, and there are those of us who think the utility is very high. I can't make it through the day without a few. But there are other people that might rate it differently. But essentially, people are going to get thirsty, and if this is the way they take care of their thirst better than, and they prefer that to other forms, then I would rate the utility high of the product. But I think it's hard to argue with the market on that. I mean, some people may think that listening to a rock concert is not something of high utility. Other people may think it's terrific. And so we would judge that. I don't think we would come to an independent decision that there was some great utility residing in some product that had been available to the public for a long time, but the public had not endorsed in any way. Charlie?
Well, I think that's right, but I'd say averaged out, we're in a bunch of high utility products. I mean, nurses' shoes, work shoes, casual shoes. We don't have a lot of Italian pumps.
Don't rule it out, Charlie. We may be here next year defending it.
Well, no, I just say if you judge the existing portfolio as indicating what the future is likely to be like.
Well, certainly a lot of essentials were sold out of Borsheim's yesterday.
Yes.
I hear my family clapping. Zone 6.
We have no question up here.
Okay, Zone 7.
Good morning, Mr. Berkshire,
Morning.
or Buffett.
I have a niece here who has a son named Berkshire, so
I'm Chris Blunk from Omaha. My first question is, in years past, we've had samples of various products. When are we going to have some Guinness?
Some what now?
Guinness samples? My second question is, in light of the multiple disasters that have taken place in L.A., has that had any impact on the cats for Berkshire?
On our super cat business?
Yes.
The L.A. earthquake, which is originally, I believe the first estimate of insured damage was $1.5 billion, which struck us as kind of ludicrous, but has now escalated. The last official estimate the one we use that's a trigger in our policies, I think is either 4.5 billion or 4.8 billion, but it's going to be higher than that. Our losses are fairly minor. If it gets to 8 billion of insured damage, that would trigger another policy or two. But I would say that the LA quake, which did considerably more damage, I think, than people would have anticipated from a 6.7 for various reasons having to do with how quakes operate. That quake is not going to turn out to be of any real. It's not the kind of super cat that a 15 or 20 billion dollar hurricane which hit Florida or Long Island or New England would be. That's the kind of we could lose, or we could pay out $600 or $700 million in sort of a worst case super cat. Now our total premiums this year might be, say, 250 million or something in that area. So one super cat in the wrong place would produce, and there could be more than one, could produce, we'll say, a $400 million or thereabouts underwriting loss from that business. The LA quake is peanuts on that scale, but it wouldn't have taken a whole lot more in terms of numbers on the Richter scale if it happened to have an epicenter where it did and be of the type that it was, relatively shallow, that we could have had that sort of thing happen. I think that the insurance industry has vastly underestimated, maybe not now, but up till a few years ago, the full potential of what a super cat could do. But Hurricane Andrew and the LA quake may have been something of a wake-up call. They were far from a worst-case situation. A really big Type 5 hurricane on Long Island would end up leaving a lot of very major insurance companies in significant trouble. We define our losses. Essentially, 700 million sounds like a lot of money. It is a lot of money, but there are limits on our policies. That is not true of people that are just writing the basic homeowners or business. Those losses could go off the chart. There were certain companies in the LA quake that thought they had what they call a probable maximum loss for California quakes, and the LA quake, which was far from the worst case you can imagine, turned out to far exceed those probable maximum losses. So I think the industry has had and may still have its head in the sand a little bit in terms of what can happen, either in terms of a quake in California or more probably in terms of a hurricane along the East Coast. So far this year, we're in reasonable shape, but that doesn't mean much because by far the larger exposure is in hurricanes, and essentially 50% of the hurricanes hit in September, and I think it's about 15% would be in August, close to 15% in October. So you have 80% roughly in those 3 months, and then there's a little tail on both sides. But that's when you find out whether you've had a good or bad year in the super cat business, basically. It's a business we like at the right rates because there are very few people that can afford to write it at the level that the underlying company, the reinsured companies, need it. And we are in a position, if the rates are right, to do significant business. Charlie?
Nothing to add.